Today is July 2nd, and we're 2 days after the IDR waiver has ended, but I do want to come along with some save updates as well as answer some questions we've had, not just in YouTube chat, but in emails to us here at LoanSense. The save update, some groups have tried to stop President Biden's change to the SAVE program, which is to allow undergrad loans to count as 5% of discretionary income as a payment instead of 10, which would lower the payment obligations for undergrad only loans. That's what it means. It's been challenged in court, and as a result, it put about 3 million borrowers in payment pause while the court was trying to work out if the Biden administration had the legal authority to cut payments in half. So that's what has transpired. 3 million Americans have been put in payment pause. A question we often get, okay, people are in payment pause. Isn't that better from a mortgage or a lending perspective because your student loan is no longer due? The answer is if you're trying to save for a down payment and have a couple more months of not having to pay, sure. But if you're trying to actually get a mortgage loan now, that is not necessarily better because your lender will have to use a percentage of the balance, whether it's 0.5 or 1%, to calculate how much is going to be used toward your student loans in lieu of what your actual payment would be, which for a lot of Americans, their payment under SAVE is lower than 1% or 0.5% of their expressed balance on the credit report that lenders see. So it's not necessarily good if you're in the lending process to be put into this, be part of this bucket of 3 million people in deferment. Because people are like, oh, well, now that I have $0 student loan payments, well, if I go borrow, my lender will use zero now. And that's not true if that's not your actual payment. So I wanted to answer the questions about that and share the news. The latest ruling is that borrowers enrolled in the SAVE will now go forward with payments at the new rate beginning in July and August. And they say July and August just because it takes them forever to roll out new stipulated payments for borrowers, right? So that's why they say July and August. By far, SAVE is the most affordable plan in the history, and a family of four earning under $66,000 get a $0 payment. It's the most affordable payment in history. Okay, so that has triggered courts in more conservative states like Kansas and Missouri to, of course, file suits and not move forward to implement the SAVE program and obviously contest it. And so, by the way, about 8 million people have entered into the repayment program as of last August, okay? So, and also, by the way, because of IDR waiver, 414 people have qualified for complete debt relief. In fact, a couple weeks ago, we heard from many borrowers who have gotten their balances forgiven as part of the IDR waiver. So that's been effective to help borrowers who have already made years and years of repayment. There's a lot of political protest against loan forgiveness, but if people have already been paying 20, 25 years and they've made their maximum number of payments under a plan, then based on the rules, they are owed the remainder of balance of forgiveness. That's all the programs have done, and that's what we're helping people realize, okay? So I just want to make sure people understand it's not like you wake up one day and your debt is forgiven. That's what so much of the media and the press have made it seem like. So I did want to mention that. It's interesting because this article also states that 3% of debt relief that has been offered by the Biden administration has been through the SAVE program, through the IDR waiver, mostly, again, like I said, to fix the issues with programs like public service loan forgiveness and the regular loan forgiveness that I talked about, where people have been paying 20, 25 years and have still been paying, right? Because servicers did not track payments. So on that related topic, again, about 3 million out of 8 million will have their payment pause. If you're a borrower, that doesn't necessarily positively impact your ability to borrow. It will free up some cash flow if you do want to save for other financial goals, but can actually hurt your mortgage borrowing prospects. So I did want to answer that, okay? Because I think there's a lot of confusion around that news. That's the latest on the SAVE program. It does have benefits of lowering payments, but of course may take time for your servicer to calculate. Also, one other quick piece of news for those that work with us, that we help with public service loan forgiveness. Mohila is going to also be moved out of servicing public service loans, and it's going to be directly managed, from what we can see, by the Department of Ed directly. So it's still the same forms. We just submit them to a slightly different location, but that's managed by different people on different payrolls. But you as a borrower shouldn't be so concerned with that information. Let us know, please. I do look at the comments people post, and do take the questions or comments that people make about what type of content that they would like to see next. We do take it seriously. So please comment below what content you'd like to see. Please like and subscribe or share with others that may be on the SAVE program or can benefit from the SAVE program. Again, if you haven't checked out, we've created recently all kinds of videos pertaining to borrower defense. If you went to a for-profit school, please check that out. We will link it somewhere, whether it's in the description or here, so you're aware. And of course, we give people a completely free plan. And in fact, the LoanSense free plan in about a week or so will reflect Biden's changes of the 5% of undergrad loans counting towards your payment. It will be fully reflected in our software as well. So if you want an accurate overview of what your payment will be if you are considering rolling into SAVE, then you should definitely get a free plan on our software at myloansense.com. And I also do have a video recently about pay-as-you-earn. So if you're in pay-as-you-earn and you're thinking about moving over to SAVE, please watch that video, because there are some considerations you will need to think about, because if you roll over into SAVE, you cannot go back into pay-as-you-earn ever again after July, which is now, okay? So it's really important you watch that video. It will likely be linked, whether it's here or in the description. Please check that out as well. Again, share with those who are in SAVE or Pay or any income-driven plan that you believe this information can help. We'd love for you to do that.